Today, we're diving into the top 7 reasons why you should consider investing in the UK stock market. If you're interested in understanding the drivers behind the potential growth of the UK market, keep watching. Please remember that nothing in this video should be interpreted as financial advice. You should always do your own research when it comes to investing. Let's start with why UK stocks are undervalued at the moment. For several years, all the buzz around stocks has been focused on the tech sector, primarily in the US. This has pushed up US valuations beyond the rest of the world. Here you can see US stocks are trading at a lofty 21 times their forecast earnings, while UK stocks are about half that, just 12 times forecast earnings. The UK has languished as it has almost no tech stocks. Instead, it has lots of less exciting financial, consumer staples, energy, industrials and materials companies. But historically high valuations usually mean that US investors have probably overpaid for stocks, whereas investors in UK stocks are buying at a discount. One benefit of buying UK stocks as a UK investor is that you're not taking currency risk. If you buy a global index fund or a US stock fund, you'll also be buying exposure to the US dollar. If sterling strengthens, you'll make a loss because your US dollars will buy less pounds. So even if you make money with your US stock investments, you could still make a loss if currency moves against you. Currency is notoriously difficult to predict, so by removing this from the investment equation, by buying domestic stocks, you're removing a source of uncertainty. Our second reason is the UK's economic recovery and growth prospects. After a period of modest weakness, the UK economy is showing signs of recovery. The Bank of England expects GDP to grow by 0.4% in Q1 and 0.2% in Q2 of 2024, with further growth throughout the year. The IMF also projects real GDP growth of 0.5% in 2024, potentially strengthening to 1.5% in 25, as disinflation, which is a fall in the rate of inflation, supports real incomes. And if inflation falls, then the Bank of England will cut interest rates and financial conditions will ease. While growth remains weak for now, these projections highlight a promising economic environment that could benefit investors. Now let's move on to declining inflation. In April 2024, headline and core CPI inflation stood at 2.3% and 3.9% year-on-year, respectively. Thankfully, the trend of falling inflation or disinflation is expected to continue, with inflation projected to return to the Bank of England's target of 2% by 2025. Lower inflation can enhance consumer purchasing power and reduce input costs for businesses, which could boost corporate profitability and stock market performance. Fourth on our list is wage growth and real incomes. Real incomes are recovering as wage growth outpaces inflation. The annual growth in average weekly earnings in January to March 2024 was 5.7%, and real post-tax labour income is expected to grow by over 3% in 2024. Higher real incomes can lead to increased consumer spending, supporting economic growth and corporate earnings. This growing consumer base can translate to stronger performance for the stock market. Now let's discuss policy support and structural reforms. The UK government has implemented several measures to support economic growth, including investment tax reliefs and expanding childcare. These growth-boosting reforms are expected to enhance the business environment and stimulate investment. A favourable policy environment can lead to increased business activity and stock market gains. In a move to encourage investment in the UK stock market, the government is planning to cut its stamp duty reserve tax, which is a trading tax of 0.5% for purchases made on the London Stock Exchange. This should make the purchase of UK stocks more attractive and may boost returns of UK stocks as a result. Point number 6 is improved financial conditions. As disinflation progresses, the financial conditions in the UK are expected to ease, leading to lower interest rates and borrowing costs. This environment is conducive for business expansion and investment. Easier financial conditions can stimulate economic growth and potentially drive stock market gains, making it an attractive time for UK investors. Last but not least is positive market sentiment. As the UK economy approaches a soft landing, with recovery and growth expected in 2024 and beyond, the overall market sentiment is improving. While performance in the past was poor, the FTSE 100 has recently been breaking its all-time highs. This positive outlook can attract both domestic and international investors to the UK stock market, and improved sentiment often results in higher investment influx, which can bolster stock market performance. I've outlined 7 reasons why the UK market is an attractive place to invest. Let us know whether you agree in the comments of the video. Please do like this video if you found it helpful, and remember to subscribe to Trading 212's channel so you don't miss out on future videos.